JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 6th of July 2020. So yep, welcome everyone. Welcome to this Monday's morning live session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, as always, just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now, quick update on what's happening here globally. Now, of course, as you are probably aware, we had a huge surge on July 3rd, and yep, we beat the previous record, and you can see that yep, the figure unfortunately continues to rise, and some other sources do suggest that the figure is somewhere around 11,500,000 already. So again, we'll keep an eye on all this. As always, I'm kind of let's say mention in the beginning of the week that we might kind of do 1 million per week. Now it seems that, to be honest, looking at this and the way the whole pace is going here, it will be easy probably to reach 12 million by the end of this week. So yep, unfortunately, of course, but it is where it is. But looking at this table as well, what's interesting here is that India kind of surged into 3rd place, overcoming Russia in terms of infections. The same leaderboard, if we can call it this way, in terms of deaths still remains the same: US, Brazil, and United Kingdom. But like I said, in here, and the total amount of infections, India has jumped into 3rd place now. Now then, jumping into a few charts, the first one I want to touch on here is the Nikkei 225. Now we are seeing a huge spike this morning, especially in the Chinese equity world, in Chinese indices as well. So yep, I'll get to those in a bit, but looking at here, I mean, Nikkei has been kind of laggard, let's say, of the whole Asian world, because if Chinese stocks have been rallying already last week, Nikkei was kind of on the modest side and was not really doing much. But this is what I talked about last week when I was covering Nikkei. By the way, the index is already closed, so we managed to gain like not a full 2%, so 1.83%. From the technical side, the index managed to break this downside line taken from the high of the 10th of June, and also managed to close above this 22,624 level that I talked about last week. So of course all this is kind of looking quite positive. The next target for us is the highest point of June, near the 1.23 sorry, not one, near the 23,185 level, and if that fails to withhold, then yes, of course higher levels could be met. But again, for now, let's keep it short and simple, because like I said, although the Chinese indices are exploding to the upside, Nikkei is kind of slowly grinding higher. So yep, like I said, let's keep it short and simple. Let's first aim for the highest point of June, near the 23,185, and then we'll take it from there. We do have some nice levels here as well, like for example the high of the 20th of February, near the 23,806 mark. In terms of the downside, we would need to see this one reversing back down, back below this downside line, and a drop below the 21,970 territory could do the trick here for more sellers. Now then, jumping into the Chinese indices and look at the Shanghai Composite today, and this one is exploding to the upside. I mean, look at the rally that we had here last week, but it seems that there wasn't enough here for the buyers, and yep, they continue to push this index further north. If we look at this technical picture here, and let me just clear up the chart a little bit. Now, of course, we can start drawing some upside lines here. Yeah, we can put this one on the chart here, basically taken from the low, the 19th of March. You can see that yes, the index kind of is trading comfortably above that upside line. However, don't get me wrong. I mean, after any huge spike like that, there comes a correction, at least a correction. So for now, if we look at where it's trading at right now, you can see that the index also overcame the highest point of April of last year, which is around the 3,288 territory. So the big question here is, can it stay above this? Because if Nikkei is closed, Shanghai Composite is still running, still open, so for another not a full hour. So yep, we'll keep an eye on that one, because it will be quite interesting to see if the index actually manages to stay above this highest point of April of 2019, and by the way, the highest point of 2019 itself. So yep, we'll keep an eye on that one. The next little target here is around here, around these highs. Let me just quickly try to capture those. So these are the highs of 20. Let me zoom in here a little bit, guys. So these are those highs, the high of the 26th of February 2018, and near the highs of the near the highest point of March as well. So this is a very nice area of potential resistance. We'll keep an eye on that one. There we go. So we'll keep an eye on that one. We're very close to that, and that level is near the 3,336 level. So in a way, to be honest, looking at how everything's kind of shaping up right now, it seems that yes, it could be an easy touch for this index. So keep your eyes on that one. For now, don't get me wrong, if this by any chance starts correcting back below the 3,288 territory, then maybe we could see a bit of a larger correction. I would like to draw a Fibonacci here just to see where this could potentially retrace to, but let's wait for a good area of resistance first. Now, the Hang Seng, the Hong Kong's Hang Seng index here is also exploding nicely to the upside. We managed to overcome this barrier right here. Well, this barrier, this is the highest point of June, and we've managed to overcome it already on Friday, but the index stayed below the 200-day EMA. Here you can see that the index continued to push higher, overcame nicely this first of all, opened with a gap to the upside today, opened just bang on this 200-day EMA, and continues to move higher. Now, the next target here for us is the highest point of March, near the 26,805 territory, roughly around there, and then we'll take it from there. If by any chance this index starts drifting back down and falls back below the 200-day EMA, or back below the 25,304 territory here, which is the highest point of June, then maybe we could consider some downside. But of course, don't get me wrong, the bear should not get way too excited yet, because we do have this short-term upside support line here. So from the very short-term perspective, yes, we could see a bit of a move lower here, which could be still seen as a correction, because the index would still be above this upside support line taken from the low, the 19th of March. But if this upside line gets broken, then, well, I mean, further declines could be possible. Now, jumping into another index, it's not open yet, but something that we'll keep an eye on today, and that's the German DAX. So here the index closed in the red on Friday. However, overall, it still remains above this upside support line taken from the low of the 19th of March. And for now, let's say even if we do see this one drifting back down a little bit here, then yep, as long as this upside line stays intact, the main scenario could still be to the upside. However, looking at the cash index right now, we can see that the price is also pushing higher, so we're basically back above the 12,616 territory. The cash index is currently balancing near the 12,757, 58 mark. So basically we're not far from the highest point of June. We'll keep an eye on that one. That, as I've mentioned before, that's our main target for now. The highest point of June near the 12,913 mark. But if that gets broken, yep, this would confirm a forthcoming higher high, and more buyers could be joining in here and potentially driving this one further north. We do have a good area of resistance right here near the 13,795 zone, or if you want, you can round it up towards the 13,800. But again, for now, like I said, guys, let's aim for that highest point of June. Now, gold. Gold is a bit tricky here, and I do apologize for the amount of lines, but let me just zoom in here a little bit. First of all, quick update on what I was talking about last week. I was telling you guys to keep a close eye on the short-term upside support line taken from the low of the 5th of June. And yep, as what I was saying, that as long as it kind of continues to provide support, we could see this one drifting to the upside. So as you can see, this last week the commodity did remain above this upside line, but this morning, for example, you can see that we violated this upside line again, as it did as the precious metal did that on Thursday last week. But the bulls are really trying to push this one back above this upside line, or should I say, are really trying to keep this the price above this upside support line. Now we'll keep an eye on this one, because we'll keep an eye on this idea, because if it does stay above this upside line, then, well, I mean, maybe the bears are not ready to drive this one lower. And also, as I mentioned to you last week, that even if the pair drops below this upside line, closes below this upside line, we need to see a nice good drop below the 1748 territory first before considering lower areas, because all this territory for us will be somewhat of a neutral one. Now, jumping into Brent oil, here not much excitement. The same rule and the same idea remains. We're waiting for this commodity to exit this little range where it's currently trading at from around the beginning of June. We're waiting for it to exit, and then, yes, we'll consider the next directional move. Now, of course, looking at this picture, you can see that the price is closer to the upper bound of this range, and in a way, it has more chances to move higher. However, let's not get too excited about this idea, because first let's wait for that confirmation break, ideally maybe a daily close as well, and then, yes, we could maybe consider maybe a further push towards the 45.20 zone, or the slightly above that. We do have the 200-day EMA, which also could be seen as a nice area of potential resistance. But again, for now, we can only speculate on this one. So let's, like I said, wait for that confirmation break, and then we could, like I said, aim for higher levels. If this area does continue to provide resistance, the commodity could easily reverse back down, but we will aim for a move further down within the range if we get a drop below this little territory right here, the low of the 25th of June near the 39.50 mark, and then, yep, we'll aim for that lower bound of this range. Now, a quick update on Bitcoin Cash. To be honest, not much happening here, and still overall the crypto remains within the range, and it would, at the same time, within that range, it's trading a little bit lower, trading below this downside line taken from the high of the 2nd of June. So in a way, to be honest, for us, really, it's not much. Well, there's not much happening right now in the crypto world, so that's why we'll wait for some confirmation breaks before, let's say, we could examine the next kind of short-term directional move, because for now it's difficult to actually even talk about any maybe larger extensions to either of the sides. But yeah, for now it is where it is. So if we get a break of this downside line, then maybe if the crypto starts pushing above the 245.50 territory, then yes, we could maybe aim for that upper bound of the range near the 280 mark, and then we will take it from there. But if this downside line continues to provide resistance and the pair does break then eventually below the lower side of the range, then yes, we could consider further declines, and well, I mean, maybe we could start aiming for the lowest point of March. But again, for now it is where it is, and that's why we'll remain neutral. Now jumping into AUD USD here. So I talked about this pair last week, and I was telling you guys to keep a close eye on some of these interesting levels. So first of all, of course, the fact that the pair is balancing still above the short-term tentative upside support line taken from the low of the 15th of June. So that's a good positive thing, of course. But what I was saying, that in order to get a little bit more comfortable with higher levels, a push above the 0.6975 mark could do the trick here and could potentially open the door towards the highest point of June, near the 0.706465 mark here, roughly around there. And then, yep, we would take it from there. But for now, let's keep it short and simple. Like I said, for now, we're keeping an eye on this barrier. If we get a nice strong move above this, then yes, this could open the door towards that highest point of June. On the downside, now previously I talked about this level here, the 0.6807, but to be honest, given that it's kind of shifting a little bit further to the upside here, we could actually raise our potential breakout point, after which we could consider slightly lower levels, and that would be somewhere from around the 0.6842 mark, which is the low of the 29th of June, and then maybe, yep, we could aim for the downside, because at the same time the pair would break this short-term upside support line. Jumping into another interesting pair here in now USD CHF. I talked about this one last week, and basically I was telling you guys to keep a close eye on this little range here, roughly between the 0.9425 mark on the downside and the 0.9544 mark on the upside. So again, for now we will keep an eye on the lower bound of the we'll keep a closer eye on the lower bound of this range, because as you can see, the rate is currently kind of testing this area again. So if we do get a break below this, then yes, further declines could be possible, but be very careful near the lowest point of June at around 0.9376 mark right here. In a way, the rate could get a hold up somewhere around here, but again, if this level breaks, then yep, this would confirm a forthcoming lower low, and the next target for us could be around the 0.9322 mark. So keep your eyes on that one. GBP USD, quick update here. I talked about this pair last week, and I was telling you guys that the fact that the pair managed to break the this downside line, this short-term downside resistance line, of course, this kind of gives a bit of more hope for the buyers. However, don't get me wrong, it is a bit of a tricky one, because the pound is not on the stronger side. I mean, in general, the pound is still very, very vulnerable. So that's why, especially to the political situation in UK, and of course with the whole situation with Brexit. So for now, yes, the pair could push a little bit higher. To get a little bit more excited, maybe with higher levels, we could wait for a break above the 1.2543 mark, and or in a way also a push above the 200-day EMA could do the trick here for more buyers, where we could then target the highest point of June near the 1.2813 level, and then we would, of course, we would take it from there. In terms of the downside, we would need to probably wait for a drop below the 1.2252 mark, and then kind of aim for lower levels, because such a move would confirm a forthcoming lower low, and maybe the door towards the lowest point of May could be opened, and that's near the 1.2077 mark. Now, jumping into some euro pairs, so here, for example, the situation is quite interesting as well. And basically for now the pair is near this key area of support that I talked about last week, which is the lowest point of June, at around 1.7190 territory. So we'll keep an eye on this level here. We'll keep an eye on this barrier, because if this gets broken, then well, this would confirm a forthcoming lower low, and the next target for us could be around here near the lowest point of February, at around 1.6785 zone. However, if this area does provide support and we see a nice rebound here, of course this could this could travel back up, especially if it climbs back above the 1.7330 mark, which is the low of the 22nd of June. But let's not forget that for now, the the pair is within this little range here. Now that's why if the pair does travel higher, still this move higher could be within this range, because we cannot, for us, let's say, to get a little bit more excited about higher levels, well, we would need to see a push above the 1.7590 territory, which is, like I said, that upper side of upper bound of the range where the pair is currently trading in. But again, like I said, for now it's closer to the lower side. Let's see if the pair can drift further down. To get a little bit more excited about lower levels, we would like to see a nice daily, at least a daily candle close below this area, in order to, like I said, aim for further declines, because what we don't want to see here is a false breakout. Quick update on Euro GBP. This is what I talked about last week. I was mentioning that keep your eyes on this this upside support line. It's not a short-term one, but it's more of a medium-term one, taken from the low of the 18th of February. Keep your eyes on this upside line, because as you can see, it continues to provide decent support. So last week I mentioned that even if we see a drift lower, which we had, we could test this upside line, which we did, and we could see also a nice rebound, which we are seeing right now. For now, of course, don't get me wrong, we have seen many times where it may rebound just a little bit and then actually eventually kind of reverse to the downside and break this upside line. But that's why for now, and until that happens, kind of we cannot really talk about any downside. And as long as this upside line stays intact, still the kind of the trend is to the upside. For those who, in order to get a little bit maybe more comfortable with higher levels, a push above this barrier here, the 0.9073 level, could do the trick for more buyers, and yep, the pair could climb to the climb further north. Now, if this upside line gets broken, of course, we could start looking at some lower levels here, and we will. But to get a little bit more excited with the downside overall, drop below the 0.8864 level could do the trick here for more sellers. But as I said, if we do get a break of this upside line and we see daily candle kind of staying below it, then kind of still increases the chances of a further slide towards the 0.8864 level. And finally, Euro USD. So here the pair is pushing higher. It is moving towards or actually is breaking this downside line right now. So this downside line is taken from the high of the 10th of June. I talked about this one last week. However, don't get me wrong, for now, yes, it's looking quite positive, but when we had a break here on the 2nd of July, we had a break of this downside line. It also looked quite positive, but look what happened. The pair ended up kind of drifting back down, selling off, and kind of closing that day in the red. Here, that's why, yes, we'll be very careful. If we do get a daily close above this downside line, yes, we could consider some higher levels, but as I mentioned last week, that to get a little bit more excited about a further push higher, we would like to see a break above the 1.1353 level first, and then, yep, consider some higher levels. In terms of the downside, we still still the same game plan remains. We need to see a drop below the 1.1168 zone, and then we could consider some further decline. So yep, keep your eyes on down, guys. So I hope you found it useful, guys. Thank you very much for joining in and watching it till the end. If you want to catch my video later on, my trader's tea time, as always, 13:15 GMT time. Yep, we'll have a look at some of these instruments, some new ones, and yep, we'll take it from there. So thank you very much, and bye-bye.